Most people work their entire lives chasing money, but what if your money could work for you? The secret lies in building a smart, well-balanced investment portfolio. And in today's video, I'm going to show you exactly how to do that, step by step. This isn't just for millionaires. This is for everyday people, just like you, who want to grow wealth, protect their future, and live with financial freedom. Before we begin, make sure to hit that subscribe button and turn on notifications, so you never miss a strategy that could change your financial life forever. Let me ask you a question. If you lost your job tomorrow, how long could you survive without panicking? For most people, the answer is weeks, maybe even days. But investors, people with a strong portfolio, they don't worry because their money is constantly working in the background. That's the power of investing. And today, I'll show you how to build a portfolio that doesn't just survive. It thrives. Part 1. Understand your financial goals. Before you invest a single dollar, ask yourself, what am I investing for? Is it retirement? Buying a house? Generational wealth? When will I need the money? Your time horizon impacts everything. Short-term equals safer investments. Long-term equals more room for growth. What is my risk tolerance? Can you handle market drops, or do they keep you up at night? Once you answer these, you're ready to start building. Part 2. Diversify. Don't gamble. One of the biggest mistakes beginners make is going all in on one stock, one sector, or one idea. That's not investing. That's gambling. A real portfolio should include diversification, which means spreading your money across stocks, bonds, real estate, ETFs and index funds, cash or short-term assets. Think of your portfolio like a recipe. Not too much spice, not too bland. Balance is key. Part 3. Asset allocation. Now let's break it down. Stocks. These are your growth engines. Over time, the S&P 500 returns about 7 to 10% annually. After inflation, bonds, lower returns but more stable. Good for risk-averse investors or older investors closer to retirement. Real estate through REITs or direct investment. Real estate builds long-term wealth and protects against inflation. ETFs and index funds. Low fees, instant diversification, and reliable long-term returns. Perfect for beginners. Your asset allocation might look like this. Age 25 to 35. 80% stocks, 10% bonds, 5% real estate, 5% cash. Age 50. 50% stocks, 30% bonds, 10% real estate, 10% cash. Adjust based on your goals and risks. Part 4. Dollar cost averaging. Want to avoid buying at the wrong time? Use dollar cost averaging. This means you invest a fixed amount at regular intervals, no matter what the market is doing. It removes emotion from investing. It protects you from market timing mistakes. And over time, it smooths out your purchase price. Part 5. Rebalance and review your portfolio isn't a set it and forget it deal. Once or twice a year, review and rebalance your portfolio. If stocks outperform and grow too large, sell a bit and reinvest into underweighted areas like bonds or real estate. This keeps your portfolio aligned with your goals and protects against overexposure. Part 6. Tax efficiency. Want to keep more of your profits? Be smart about taxes. Use tax-advantaged accounts like Roth IRA. Also, hold long-term investments. Capital gains taxes are lower if you hold assets for 12 months or more. Part 7. Avoid these common mistakes: chasing hot stocks or trends, timing the market, ignoring fees, not having an emergency fund, letting emotions guide your decisions. Smart investors think long-term and stay the course, even during downturns. Building a successful investment portfolio doesn't require a finance degree or $1 million salary. It takes clarity, consistency, and commitment. The best time to start investing was yesterday. The second best time is right now. If you got value from this video, give it a thumbs up and subscribe for more simple strategies to grow your wealth in 2025 and beyond. And in the comments below, tell me, what's your #1 financial goal this year? Let's grow together.